The first ratio is operating working capital to revenue. How do we calculate? Trade receivables plus inventory plus trade payable, that becomes our minus trade payable becomes our operating working capital, and we divide it by the revenue. So this figure is coming 18.4%. Are you all getting the same number, or you are getting a different number? Anyone can
Sir,
please?
sir, actually, I think we were working with different these reports.
Uh-huh.
So figures are not matching.
Uh, Different reports. So are you not using the same one, this one?
And no, sir, we were working on 2020.
Okay, 2020.
Yeah,
Uh,
formula is right, but
yeah.
figures are different.
Okay, so you've done it for 2020 and not for
Yeah,
21.
yeah,
Okay, no worries. So no worries still. So what you can do, you can just make note of the numbers that I'm sharing with you,
yeah, yeah.
so that they become your reference point for calculating
Right,
21 also.
right,
Okay, okay. Then, okay. So, and then you can check whether the formula that you have used is same or it is different. And if there is a discrepancy between what you have done and what I'm discussing, and if you have a doubt, you can please ask me, and I would be happy to clarify that, so that when you do these calculations for 21, you would be able to do it with definite confidence. The second ratio that we need to calculate.
Can you share this file again? Because in the shared folder, other three files are there, and we were confused which file to use.
All right, so I will share with you. So I will share it with you, the financials that I just showed to you. Is that right?
Yes.
Okay, good. The second ratio that we need to calculate is the current operating income margin ratio. And how do we calculate the current operating income? And how do we come to the current operating income? Sales minus the cost of sales and minus the SG&A. That gives us the current operating income. And somebody was asking whether the current operating income and the current operating profit, are they same? Yes, of course they are same. So, but in our company we use current operating income as the regular terminology. So even if you read somewhere as current operating profit, you can assume that the current operating income and current operating profit are same. And this figure would come to 10.3%. So you can please make a note somewhere, and do these calculations at your sometime during the day. So tomorrow morning when we start, we would run a check with these numbers. In case if you have been able to get the same numbers in your calculations, then nothing to worry. In case your numbers would be different than what I am sharing it with you, we can spend few minutes early morning tomorrow when we start. Then the current ratio is very simple. Current assets divided by current liabilities. This ratio is coming 1.65. Then return on capital employed, current operating income divided by the net fixed assets plus the OWC, as we have seen. This ratio of yours should come to 8.1%. And the net gearing ratio is net debt plus net debt divided by the equity, 44.8%. Days sales outstanding would come to 51.2 days. And how much would be okay, and then your days payable, days sales outstanding, and that would come to 12 days. So this is how you will work out all these numbers. And now we will come back to our main session tomorrow morning. Before we start, we will spend few minutes on this to check that when you calculated all these numbers for the year 21, whether you got the same numbers as I have shared with you, or you got different numbers. In case you got different numbers, any one of you, we would spend some time to clarify those reasons, and we would continue for the remaining session of tomorrow. So let me come back to where we were. Is that okay with everyone?